there's nothing wrong with bonds, because bond in itself, when you list your bond and it's subscribed or oversubscribed, as we saw last year, it shows confidence in your fiscal policy, it shows confidence in your monetary policy and your CBN. It means people trust you, because this same country, we've gotten to the point where we could no longer raise money domestically. Banks were not willing to borrow the government money because they were not fulfilling their obligations. Nobody was willing to invest in Nigerian bonds because of the slippery exchange rate and because governments were failing all of their obligations.
This is SOUQ Business Landscape.
The federal government plans to raise up to 900 billion naira from its January 2026 bond auction, doubling the 450 billion naira targeted in January 2025 as fiscal pressures and refinancing needs intensify. The move signals a sharp expansion in domestic borrowing amid rising debt servicing obligations and constrained revenue growth. Other documents released by the Debt Management Office (DMO) show the auction will feature 3 reopened federal government of Nigeria bonds with a combined size of 900 billion naira. Now, the offering represents a 100% year-on-year increase in the size of the January auction, reflecting higher funding requirements and a tighter external financing condition. Analysts say the larger auction could push yields higher and crowd out private sector borrowers if demand weakens. However, strong participation from pension funds and banks may absorb the supply. The outcome is expected to shape interest rate trends, liquidity conditions, and the government's broader borrowing strategy in early 2026 period. Chooks, are we moving in a good direction?
This is a better option than going to any of the Bretton Woods organizations.
Okay.
It's domestic borrowing. Yes, it's going to affect domestic borrowers, private borrowers at the end of the day. But the thing is this: if we keep the naira stable, just the way it is now, and if we produce more and import less, and maybe the fastest way of doing that is to cut down fuel imports. That's the fastest way of going that route. If we can get that done, then we'll have less pressure on the naira. Then I am optimistic that whoever is buying bonds now will not buy at a good rate and tomorrow the naira is losing value. I don't know if you understand, because
Yes.
these bonds are all denominated in naira.
Yes.
Now, will the bonds sell? I'm also optimistic. In the last 2 years, we've seen bonds that were all oversubscribed.
Yes.
But the rate at which the bonds are coming is another thing that we should start asking questions. In the budget, over almost 30% or a little above that is earmarked to be borrowed to fund the budget. But at this rate, my mind is saying, let's start cutting down on government spending. That way, we will spend less on governance itself. Let's start from the presidency down to the governors, down to all elected officials. Let's start cutting down on government spending. We can't afford the normal way of running government. It's open, it's there, everybody can see it. Because for people that might not understand, those that will buy bonds are buying, knowing fully well that all things being equal, they will make profit in 2, 5, or 10 years. They will definitely make profit. But it's government that is going to pay back at the end of the day because they are borrowing money from us in place of selling bonds to us. Now, should it be a norm? Government has to function. So there has to be money for government to function. So let's look more at productivity. We will not ever stop that. Let's look more at productivity. At the end of the day, if more of 2025, the bonds that were January bonds were 450 billion, 2026 January is now 900 billion. Mind you, by the time we are taking money from domestically, what about private companies, private individuals, private businesses that will want to also look for where to get money internally? Government is going away from banks, which is, at least for the first time in a very long time, that is very positive. Unlike what it used to be before, government will go to banks and pull out funds. Now government is gradually stepping away from Nigerian banks. We just want to see more accountability, more transparency in governance itself, then let's cut down on government spending. Because this particular 2026 budget, everybody's eye is on it and want to see performance of the budget. Then funding is the main thing. Revenue is an issue, so this is a way of government trying to also get money to run the budget. But let's see a whole lot of accountability. For those that are out there, a lot of banks will subscribe for the bonds.
Yes.
Individuals can also subscribe for the bonds. Then pension funds and all that, we don't want to hear the stories that happened during the last administration. Whoever is managing any pension fund, especially that of the police, we don't want to hear stories tomorrow. So whoever is pulling pension funds, retirement funds, or any of the funds anywhere, make sure that you are going to pay back with profits. Thank you.
All right, coming to you, Mortal, I mean, he talked about capital expenditure, leaner government. But my question now is this level of domestic borrowing, is it sustainable? And he also mentioned something that is quite concerning, that it's coming, these bonds are coming much more than what we had last year. And he also talked about the stability of the Naira, which we also have to be cautious about. Throughout last year, we could say it was relatively stable. What are your concerns? What are your thoughts about this?
I believe that we've turned a curve as regards stability of the Naira, in my own opinion, because for over 18 months now, the currency has been stable and is no longer a subject of concern, even in the global markets. Okay. Nobody is worried about the stability of our currency. And a lot of business people and the global markets are positive that the Naira is further going to gain this year because of our reliance on domestic refinery. So we believe the Naira is going to stabilize at about 1,300 by the end of this year. Now, that being said, bond, we know why we are here. Last year, 2025 budget, the revenue was projected. It was overshot by the National Assembly. And that is why the whole budget was flawed and we ended up at 30% performance. And the president wants to complete the performance of that budget in the first quarter of this year.
By April.
So that means we are going to be running 2 budgets this year. We are going to complete the 2025 budget and we are going to run the 2026 budget. Now, we were told that the 2026 budget will start running from after April. But the truth is that the budget of 2026 will start running from January. You know why? Because salaries are going to be paid. 2026 salaries are going to be paid. So if we see the bond growing by ×2, it's because they need revenue for 2026 as well. And the revenue for 2026 has not started yet coming in. These are all projections, right? And last year, the president boasted about exiting the local market for borrowing. He meant the local bank. Bonds, there's nothing wrong with bonds. Because bond in itself, when you list your bond and it's subscribed or oversubscribed, as we saw last year, it shows confidence in your fiscal policy. It shows confidence in your monetary policy and your CBN. It means people trust you. Because this same country, we've gotten to the point where we could no longer raise money domestically. Banks were not willing to borrow the government money because they were not fulfilling their obligations. Nobody was willing to invest in Nigerian bonds because of the slippery exchange rate and because governments were failing all of their obligations. In fact, government financial instruments mean nothing just a few years back, in just 2-3 years before now. So if we have gotten to a place where people now have so much confidence in the government financial instruments, it means the government is doing something well, and it means the people trust the government. And that is why bond is like a loan, like Mr. Chooks rightly said, but is a loan that you are setting all the conditions by yourself. You are setting the times, you are setting the interest, and you are setting your condition. And it just means that you are in a better place of negotiation of the loans that you want to borrow. And like Mr. Chuk said, I don't agree that it's going to affect private borrowers, because private borrowers will go to the commercial bank. And when you put money in the commercial bank, whether it's government bonds, whether it's forex, banks still have to invest in any good investment. So if the banks choose to invest in government bonds, it just shows that they have confidence in the government and their policy and the way they are running the government. But I don't think it's going to affect me, you, or private businesses, SMEs that wants to borrow money, because governments, like they said last year, are not going directly to the bank to take loan like the way private citizens and private businesses do.
For the issue with the banks is this, just like we were talking about microfinance, the banks are growing, the banks are making profit. Just like when you spend money, you don't have that money to spend again. Now, if the banks decide to say, okay, let's spend 50 billion on government bonds. Yes, they have spent 50 billion on government bonds. 50 billion is out of their coffers to borrow to private individuals or private businesses. That's what I'm talking about.
Yeah, but regardless whether it's government bond or not, they still have to invest. Sometimes they buy shares. Sometimes they still have to invest. So it just shows that if they're investing in government bonds, in my own opinion, like two things can be right at the same time. And depending on what point we are looking at it from. So I just think whether it's federal government of Nigeria's bond or not, the bank will still invest somewhere eventually. They just don't keep all the money in the vault and just wait for people to come and borrow. They still have to invest.